Pat, and happy Friday.
Hey, Rick, how you doing, buddy?
Good. I'm going to be doing some multitasking. Be looking at the phone. One of our YouTubers, we wrote an offer yesterday. We're waiting for the counter offer, so we may see the results live here on YouTube. So we're this close.
Are you gonna have anything like breaking news on the bottom of the TV of the screen?
I could do that. I could put some kind of a little thing on the bottom. That would be kind of.
Don't worry, CNN or Fox News is not gonna probably pick up on your offer. Sorry.
They didn't.
They got more things.
They're not. Well, welcome to our millions and millions of viewers, and that excludes CNN and all those folks. So I want to let people know. Pat and I don't rehearse. We just we log in to talk about numbers. Kind of like talk amongst ourselves, and so a lot of times we just. Pat stresses me out, logs in 45 seconds before it's time to go.
I just go to show you that this is not orchestrated.
Yeah, and he goes, "What are we going to talk about?" I go, "Buckle up, I'm going live right now." So that's what we do. So what we try to do is we pull up the numbers and we look at it. We try to make sense of them. We try to guess where we're headed, and we don't really want to try to make any bold predictions, but sometimes numbers are just blatantly obvious, and when that's the case, we'll let you know where we're at. So here's where we're at today.
Hey, can I jump in?
Yeah.
When you say guess, it probably scares some people, but I really believe in my 30 years of being in finance, there's a lot of people that are experts that I think we do a better job of guessing than they do some days. So I just want to give that caveat.
Yeah. Okay. I would agree with that. Go Packers. We got there. All right. So we're at 5,806 listings. I think it's gone up maybe 300 in the afternoon here. I didn't do a fresh check. There's no more words to say that that's historically low, shockingly low, lower than ever. It's just every time I log, I was like, you got to be kidding me. And you start going down neighborhood by neighborhood. I mean, it's brutal. It's brutal. Yeah. So we had 3,609 homes get listed this week, 3,888 go under contract, and that number is creeping up. So it's frenzied. But having said that, in the over 55 market, it's busy, but it's not frenzied. The best way to describe it is in the over 55 market, the grocery store is really busy. A frenzied market, everybody's beating each other up in the toilet paper aisle. So now that's what's going on in the general market, but not in over 55. And there could be a lot of different reasons for that. I really don't dissect it, try to figure out, but that's what we're seeing. You can sell a house quickly, but they don't go within hours with multiple offers like we see in the general market. So with all the comments and everything that we get about, well, here comes the bubble and we're getting priced out and everything, I kind of did a deep dive today and I wanted to see, well, what if we have been normally plodding along instead of that great big jump in 2007 and then the dip, because real estate goes up 3.5% a year historically over time, right? So I just kind of took a trend line and I want to share my screen with you. Can you unshare that one there for me, Pat? You got on the bottom?
Oh yeah. Let's see. Stop. So stop sharing.
Yeah. Yeah. Okay. Then I can share. Okay. Sharing is caring. So here we go. I'm going to share that. And then I'm going to pull up this PowerPoint and I'm going to go slideshow full screen.
Do you realize PowerPoint is like 1980s?
It is. But you can see it, right?
I mean, I definitely can relate to it. I'm in 1980. I'm stuck in the 80s. So
this is the first time I've used PowerPoint in probably 3 years.
I like PowerPoint. It's very simple.
We used to call it death by PowerPoint when we went to meetings. Okay, so here's reality: up, down, up, straight up, right? Here, the blue line is if things just went normal, up 3.5%. So I said, okay, what would the payment be on a 1,600 square foot home based on today's price per square foot, what the price per square foot would be in a normal Ascension, and where was it in 2001? So you can see in 2001, it was $96. And so interest rates then were 7.1. So your 1,600 square foot house would run about 200, and I think I had here 153,800. So your payment would be 1,324. Okay. Now it dipped down, it came back up. Here's, if we are normal, the price per square foot today would be 164.26. And I put in a interest rate of 4% because that's kind of where we were, the zone we were hanging in, right, Pat?
Mm-hmm. Yep.
So I just put that in and we come up with 1534.15. Now today we're at 195.64. And because of rates being at 2.8, that payment is not much higher than what would be normally, 1569. And it's a couple hundred, about $240 more than what it was in 10 years ago.
Yeah, which is pretty reasonable.
Yeah, rate driven. But if we come down to normal, okay, we're going to come along this trend line. Mm-hmm. So if things level out and the market gets normal, that's not a crash. So if it crashes, it's anybody's guess, but it can't crash when we're seeing the level of inventory that we have. It's mathematically impossible. What is a given prediction right now is that with the inventory as low as it is, we are going to have huge spikes in pricing this quarter. In fact, the first 6 months.
I agree.
And Fed Chairman Powell came out and again assured everybody that he's not going to, they're not even thinking about raising rates. But even when he just says that, though, I mean, the rates can still come up a little bit. I mean, he doesn't have a whole lot more levers that he can control. Today last night, Biden announced $1.9 trillion. We don't even talk in millions and billions anymore. It's trillion. 1.9 trillion in incentives. And did that change the bond market at all, Pat?
No, actually, what happened with the bond market last Tuesday with the elections and all the crap that was going on last week, rates did spike up probably on the average. I'm just kind of giving general ranges, but the 10-year, I mean, we went from the mortgage-backed security market did spike up. I mean, it went from like 0.93 basically up to rates went up to 1 point. The 10-year mortgage-backed security market hit 1.14. So it went from 0.93 to 1.14, which is a huge run. I'll share. Can I share my screen?
And I guess my quick point to that is, and that's not because of anything Chairman Powell said or did. That's just the free market doing what it's doing. So he's trying to tell everybody, keep them there, but he's expecting things to get really good. He said back to pre-pandemic levels here real quick. But yeah, go ahead and share your screen there, Pat. I got it right there. I'll add this to the stream. There we go.
Yeah, I mean, right here, this was on Tuesday. Basically, let's see here. This right here was Tuesday, and you can see the spike every Tuesday, Wednesday, Thursday, Friday, Monday. This is basically rates. This is the mortgage-backed security, the price of the mortgage-backed security market. It's inverse of mortgage rates. So if this is going up, basically rates are going up. And now it's settling back down. So I mean, we saw this spike, and there's another that I want to show you, just to show you. Let me see here if I can. Let's see, where is it? Bear with me 1 second here.
Well, it's one of the things we were talking about a little bit earlier this morning is, try to shop your rate zone because the rates are doing this, right? So
Yep.
when you're, and shopping rates is, sometimes it's not what you think it is.
Yeah, it's
You
not.
know,
And we're going to talk about, that's a topic we want to talk about. We have obviously a lot of people there, people there, they get fixated on the house, and they kind of use the rates, talking about rates as kind of just a subsection. Like, hey, what's your interest rate? And they don't put, there's not, sometimes people want the best rate. They want to shop, but they're kind of throwing some different things in the short term. And I'm going to go over this. Can you blow this right here? Can you blow these up at all or no?
no, I don't
Okay.
think I believe so. Let me wait. Look at this. I'll go
Okay.
full screen layout. How's that?
Okay. Yeah. I mean, I want to
See,
get
we
people
learn as we go.
huh? Yeah.
We learn as we go.
We talked about that last week. I know people, the first question that I get, and I've talked about this over the last 6, 7, 8 months we've had, and you and I wanted to maybe, we talked about just going a little bit deeper on interest rates, because it is a factor that, based on that graph that you showed, with the 3.5%, the payment at 7.1, down, and then you ran at 4%. As you can tell, it's rates are going to have an impact on your payment, no doubt about it. And as you can see right here in this area right here, being a broker, I could shop. I've got this lender from Lone Stream. I got Freedom. And I'm just trying to give people a breakdown on behind the scenes on interest rates a little bit. So as a broker, I've got this whole list. And this list is not even, it's an abbreviated list because I could only cut and paste so many lenders. But I probably got another 20 lenders. So when people call me, I run their scenario in this program called Loan Sifter, put the LTV in, the credit score, what their debt to income ratio is. It'll split out all these lenders for me. And then when I hit this, like say this lender right here, this breakdown will go a little further. Let me see here. Where's my cue? Basically, this will be what, this is what I'll get right here, is a breakdown. And when people say, what's my interest rate? Well, Mr. Jones, at 2.75, and this would show me the discount of what I have to do to get to to get to 2 3/4. Now, if I raise this rate to 2.875, just an eighth, which is about a $15 a month difference, depending on the loan amount, all of a sudden I go from charging $1,000 to giving a credit of $1,000. So my goal is really to balance out, where is your sweet spot that's going to economically make sense for you? And this is where I differentiate.
But Pat, what's your rate?
Yeah. Well, Rick, let me tell you, let me pull up, and that's the thing. I mean, I have to input all this information, like the loan to value, the credit score, the program. And then basically this is a Fannie Mae. This is Fannie Mae. This is a Freddie Mac right here. Like Quicken, I've got Quicken. I can price out Quicken here. I mean, a lot of people go to Quicken. I do it on a wholesale basis, but believe it or not, I'm not charging people 1 or 2 points discount, because what they'll do, well, Quicken, and no, I'm just going to call them out for what they are because I've seen it so many times. It's the biggest company out there, but what they'll do is, you see this, they'll say, oh, I can get you 2 5/8, Mr. Jones, and your other guy's getting you 2.875. Well, you're paying $3,200 to get to that 2 5/8. And a lot of times, they pose it as discount points. And back in the day, a lot of people say, well, this guy's charging me a higher rate because he gets to make more money. Now, just a side note to that, the CFPB basically has eliminated me to get that, what they call backside. They used to be called backside pricing right here. Like back in the day, I could charge 2.875 and I would get that $1,000 credit versus giving it to the client. So that's what the CFPB did in terms of their Dodd-Frank. They cleaned up the compensation. So I get basically a flat fee. So it does not matter what my rate is that I'm giving people. Like you said, if I gave somebody 3% in this illustration, I would be giving them a credit to pay for their closing costs at $2,600. So you can see the difference between 2 3/4 and 3. Quarter point, obviously depending on the loan amount, it might be a difference of $30, $35, give or take. I'm just kind of guesstimating, just depending on the loan amount. But in that case, though, if somebody is short their closing costs, I can go from 2 3/4 up to 3. Instead of charging them $1,000 to get 2 3/4, I can give you a credit of almost $2,700 at 3%, and your payment's still going to be low. So being a broker, I've also got access to lower private mortgage insurance because they broker out to certain mortgage insurance companies. So that's a big advantage to people. So when people call me, to sum it up, when people call me to say, what's your interest rate? This is what basically I'm looking at. Okay, what lender is Loan Stream right here? Okay, they're $1,000. I can give $1,000 at 2.875. But then this lender right down here, let's say Lakeview. Well, they're costing $126. But their turn times might be a hell of a lot better than, say, Lone Stream. Lone Stream might take 45 days, whereas this lender, let's say Lakeview, might only take 15 or 16 days to get out of underwriting. So that's where the price really does come into factor as far as, how fast are you going to close? If people
that's important stuff to know up front too.
Oh, yeah.
What's frustrating in this business, and I've got 2 YouTubers that called me this week that are doing it right. One wants to move out here and wants to get something in June and wants to start getting prepared now. That's good. So he wants to have his VA loan ready, wants to figure out where he wants to move, and he's working on a better debt ratio. And versus the person that calls and says, I saw this house on Zillow. I found your number. I want to write an offer. Well, you're behind the 8 ball in this market, because by the time you saw it on Zillow and you call an agent and you want to write an offer, you've got to rush and hurry and get pre-qualified. You haven't even explored what kind of financing options are out there yet. So when you write this offer and you throw in a quick pre-qual, you might end up with some fast buyer remorse too, because you're going to hear that, oh, there were these other programs. Wait, I could have gotten credits at the close of escrow. You mean there were lenders actually that could close faster than 45 days? So I strongly recommend that you get an agent first and say, I want to buy in 3-4 months. What do I do? And get everything lined up so that you can be the first one out of the gate when you find that house. So instead of working backwards, when you see that home on Zillow or Redfin or Realtor.com, and then you go to your agent and then you're in a hurry, none of those other financing options and plans that are out there are even going to be explained to you, because they're trying to rush. Okay, well, I'm going to get you pre-qual because I know you want that house. And what a lot of people don't know is if I pre-qual through bank A and then I find a better deal on bank B, you have to get permission from the seller to switch financing. A lot of people
can get
don't
pre-qual
know
from different companies. You can get pre-qual from different companies before you put the offer in.
Exactly. You can have 3-4 pre-quals if you want. It's not going to hurt your credit. But but I guess my point is, take the time to understand what your options are out there.
Yeah.
And make sure that you've got an agent that's sending you a list of homes, so that you're not digging, and especially in some of these bigger websites, I call it the home of great disappointment. Zillow's great. It's got a lot of resources and stuff, but they lag behind the MLS. And it's nice when something comes on at 1 p.m. that within 15 minutes. Oh, there's a new listing in Gilbert.
Exactly.
So.
Yep. No, I totally agree with you. That's great information. I mean, speaking of VA, like this right here, this in here, this is a VA refi. Give you an example of, once again, to go back to the pricing. That's why I said it kind of is frustrating when people say, well, what's your interest rate? Kind of like they're just shopping, just going on Match.com and looking at pictures of the girls and that's it, or guys. Not looking, not reading, you got to look at the profile, you know.
Yeah.
I mean, you know, you got to look at the profile, see like, yeah, this is not quite a match because, you know, it goes back to like you and I talked about people calling in, they see the internet. I always say people are drowning in information and we're starving for wisdom. And people are looking for the lowest rate. I get it once again, but once again, mortgage companies, there's thousands and thousands of mortgage companies out there. And you know, you've got the access to the internet, but what companies are going to do, they're going to advertise their lowest rate. And that lowest rate has some type of fine print. Like going back to this VA, I'm jumping around here just to give people kind of a smattering of what goes behind pricing. Like this is a VA Earl refi. This is my job. When people call me to say, what's your interest rate? My job is to look at your financial situation, how much money you got to put down, how much you got for closing costs. And I've got to try to adjust the rate accordingly to help the deal get that deal closed. Now, this is a VA. I'm not going to give you all the parameters of it, but basically 2.245. This is 0 means it's the par rate. Now, if you wanted to go to 2.125, and this illustrates how crazy a buy down can get, you know, either benefit you or hurt you. And this is what, when people call a call center, you know, they look on the internet, they call somebody in a call center. They're not going to give them I don't ever hear people saying, oh yeah, they gave me options of buying it down. They basically, all they do is quote your rate saying, all right, here's your rate. I try to give people the options, say, hey, this is what kind of I'm looking at pricing wise. If I go up to 2.25, I'm only getting a credit of $261. The par rate is here 0. That means you have to buy it up or buy it down. But then look at 2 1/8. That's a cost of $6,672. That's a huge difference for basically 12 basis points in rate. And look at your payment changes by $22 a month, and that's it. That's not this is not the rate that I want to get people. I'd rather, you know, I want to get them this 2.245, which is going to help them, you know, from a cost standpoint. As you can see, if I just go up a little bit, it's not much of a difference, 261. If I go up basically 1/8 of a point, I'm getting the client, you know, about a $2,000 credit. So once again, you know, when you call an internet-based call center, you're going to get an internet-based LO. And, you know, my point is a lot of these call centers are staffed with freshly hired people that they just hired. And because let me ask you this, Rick. Do you think a guy that's been in business 10, 15, 20 years, an experienced loan officer that knows what he's doing is going to actually painstakingly get a job at a call center?
They start there and painstakingly can't wait to get out.
Yeah.
There was a big call center, the biggest one in Phoenix, and one of the guys that I know that worked there told me, he goes, there was no more sickening feeling than on a Friday watching your floor manager walk in with a bunch of pizzas.
Oh yeah.
You knew you were going to be there the rest of the night.
Yeah.
Like, no.
And, you know, my whole point is, you know, I'm not trying to bash on anybody, but like you said, once again, do you think that anybody with 10, 15, 20 years experience would want to take your phone call in a call center? They're going to be out. They got their established book of business. And so you got those people answering your phone call. And then when you ask, you know, what's your interest rate, they're going to basically give you, you know, chances are they're probably going to give you, you know, this rate right in here somewhere. You know, okay, hey, we can get you 2 5/8. You know, and typically a lot of times, you know, people are enamored by that. Like, that's great. Send me your numbers. They'll put this on the loan estimate, you know, 1.071 cost of $3,200. People, I'm amazed how many people just gloss over that and just say, okay, that's just cost of doing business.
Yeah.
And they don't, I try to give people an option saying, hey, you know, you're going to be in the house. If you're going to be in the house, you know, because basically your difference in payment is, I just try to figure out, it's really mathematical. It's very simple. You just figure, okay, I'm spending $4,000 to save $30. You know, $4,000 divided by, say, 30, that's 133 months. That'd take me 11 years to recoup that cost. So this is, you know, there's certain breakpoints and this is what I really try to do for people. that you're not going to get with, or, whether it's me or somebody else locally. Like I said, if you're trying to get, you're probably going to get maybe an eighth better, on rate going through these internet people. But once again, like I said, they won't be available at 8:00. And my goal really is to help people, give them enough information, be transparent about it, so they're making a good financial decision based on the numbers that we've got that day. Because to go back, and people say, well, and just I'm going to expand a little bit quick here on this. And I know I'm getting chatty, but to go back to this, people say, well, right now, what's your rate today? Okay, rates are here. If I would have quoted this basically like, what's your rate today? I'm gonna turn this around to show it so it can make a little bit more sense. Here's the U.S. 10-year Treasury. Basically,
looks like Bitcoin.
Yeah, I mean, basically, if you would have called me today, or if you would have called me on January 5th, that Tuesday, and said, "What's your rate today?" It would have been probably right here. Would have been, say, 2 and 5 ace. But by the time we got to here, it might be 2 and 7 ace. So, if you're a younger couple that's looking, if I quoted you 2 and 5 ace, on Tuesday, all of a sudden, Wednesday, Thursday, Friday, Monday, you call me back and say, oh, that 2 and 5 ace is now 2 and 7 ace. So 2.625 up to almost 3. Really, this has been about a quarter point move at least in interest rates. So my goal, I've got a couple people that I'm, looking. I told them to back off. I told people right here, this is the advice that I try to give people, is like right here. I was talking to some people last week, and I said, hold on, we're making a run. It's not a good time to be locking rates. And sure enough, you can see where it kind of tailed off here. And I'm going to show, this has been the 1-year movement in rates. How we saw a bottom in August, and they've been ticking up. The rates have not been moving up as drastically as they should be, because once again, the lenders have had margin to play with, so they're not raising rates as drastically as they probably could be. But here, like I said, it got messy in here this last week. Rates moved up, but what I'm looking for, and this is the technical analysis that I try to give people when I don't get people too buried in this when I'm talking about interest rates. But when a short term, I'm looking for rates to kind of come down to this line right here. This is a support line right here. So this is a support line right here, and this is another support line right here. So if rates start coming down, they might, short term, when I'm locking somebody, I'm like, hey, I think we're going to see a chance to see them bounce back down here. So I'm not going to lock somebody for a couple of days. Whereas if you call a call center, they're going to lock you that day and call it a day, because they don't want to mess around. They don't want to mess around with following rates like I do with this.
Yeah, they don't want to do any trend analysis or anything.
Yeah, this is the trend analysis that I do for people when I, like I said, if I got a contract beginning in January, I'm holding off for a while, because rates the last couple of days have been just, going up. Not up, but I mean, basically a quarter point, which does make a big difference. So hopefully I'm not confusing people. But like
I think it's good to see it. I think it's good to see the movement. And that's why at the beginning of this call, I said, you should probably want to know what interest rate range you're comfortable with instead of a specific rate, because we're all playing within this range. I want to buy a house. I want the payment. It'd be great if the interest rate would be between 2.5 and 2.9. Anything above that, maybe it'll force me to change the price of the house I'm looking at. But, you don't want to get in there and go, I want it to be 2.5 and now it's 2.6 and you're, damn it, I'm out.
Yeah.
You don't want to do that. And we have a question down here that says, what's the time difference between seeing a house on Zillow versus the MLS? It actually depends on the market. So Zillow has different agreements with every different multiple listing service in the country. Right now in Arizona, Zillow's registered as a brokerage because they can now buy and sell houses, even though they said they'd never do that. So their timing in Arizona is much better than it used to be. It used to be that if you put a listing on, you'd get notified in the MLS like within 15 minutes, sometimes even quicker if you're on like an email subscription portal. It's instantaneous when an agent looks at it, but you wouldn't be able to see it that fast. They would lag about 20 minutes, sometimes a half an hour. Where they really got bad is if there was any status change, like went under contract, sometimes they'd lag for days, if not months. And so now that they're a brokerage and registered in Arizona as a brokerage, then they're not quite experiencing that bad lag time that they did, but they might be in Idaho, Nevada. Get what I mean? I mean, there's some states where that may not, they're not getting live data. So it's a lot better if you've got somebody that you're working with, because, we get up in the morning and rub our eyes and get a cup of coffee and go straight to the MLS. And we look at the searches we got set up for people, and we dig around and see if anything's changed, and send out stuff that we think's interesting, and let you know it's hot. And we also get to see things like coming soon. We know, and we talk to each other. So, I'll have agents say, I got a listing coming up in Ahwatukee next week. I'm ordering the sign today. Oh, great. Well, tell me about it. And, we're just a network of people that are in a multiple listing service is a cooperative. It's a cooperative where people share data, and we are in an association that ensures that data is accurate. In the old days, just look at Panama. So I could go to see a house in Panama and it's listed for $175,000. Pat's an agent. He's asking $180,000 for the same house. Well, why is that? Well, because there's no mutual agreements for accurate data. I can put on the MLS that this thing's got 6 bedrooms. Pat can put down that it's only got 3. There's no punishment for having wrong data because there's no local MLS. So with the MLS and all of the compliance that we have to do and the fines that we have, you can be assured that when you see it online, it's accurate. And the same thing applies with Redfin, Zillow, agents' personal websites, because it all comes from one source. And that source is highly regulated to where that information has to be accurate. If you get something wrong, they send you an email right away. It's called a violation. You're in violation of blah, blah, blah. You didn't, your showing instructions weren't accurate or something like that. So that's why it's regulated the way it is, because in Panama, you can go to the homeowner and go, hey, that house is $175,000. And they go, oh no, it's only 160. The agent pads on the extra money that they want to make. So they tell you, just go talk to the owner. So, well, thanks, Pat. I'm glad you took the time to show that to us. And
I want to give a breakdown of, like you said, people say, and we've had, people in the past, say, you want just send me your rates. Well, I can't, if I sent somebody rates on January 5th, showing, like I said, 2 5/8, and all of a sudden 3-4 days later, I'm showing 2 7/8. This makes me look like a liar. The typical
that's
rates
only okay in poker.
Yeah, something, because basically, look, people say, well, rates, the average person picks up a newspaper, looks up rates at Monday. Let's say this is a Monday, or this is, let's say this is a Monday right here. All of a sudden you see that, and all of a sudden it's like, all right, 4, 5, 6 days later, what happened? These little spurts in here, right here, right here. This is the stuff that I have to try to work with clients when when you send me a contract, I've got to talk to the client, say, hey, rates have gone up a little bit here. We got to wait for a little back off. Like I said, once again, this is what, the other agent, the listing agent, they want to make sure the deal is going to close. They want somebody confirmation. I've talked to, that's another point that I've had the last several months is I've won people listings because I've talked to a listing agent and I've gave them confidence that I can close the deal. And that has helped them over 4 or 5 other offers. I had one last week. I was on the phone with the listing agent for 2 hours. We did not get the offer, but she said I was really proved the point to the client that he was solid. They decided to take a little lesser offer, but it was cash, which was kind of frustrating. But
well, you saw me pick up the phone there. So, Diana, congratulations.
No, there you go.
You're getting your
Breaking
house.
news.
Breaking news. So all we got to do is just get a doc revision here, and we're rocking and rolling, ready to go. You can find homes out there, folks. We did it, and we're very pleased at how we came in on it. And I'm excited. It's in an over 55 community, but they do have offers rolling in today, and we're doing well. So
Good to hear.
everybody have a super weekend. It's going to be a very interesting week, if not kind of scary. We've got the inauguration. There's just all kinds of nonsense going on. I personally think that's part of the reason why we didn't see a spike in inventory. Now, elections normally, historically, have never mattered in real estate. Whatever trend was there, that trend continued after the election. And our trend was that inventory was declining rapidly. That trend has not been interrupted because of an election. It's actually picked up pace because people have anxiety, and in anxious times they don't want to change. They don't want to make a move. The majority of the people that are buying homes right now are between 35 and 45 years old. Those are the people that are driving the market, that have done an excellent job of saving their money for a down payment and have done a great job with their credit, and they're ready to go. So the rates are down, they're seizing the opportunity, and they are running to the front doors of these homes, and they're moving from state to state. So that's the age group that's driving this huge spike in sales at a time when there's nothing for sale. And I just equate it to, the toilet paper shortage, only worse. So it is, I expect it to get better, but I in no way can give you any idea when. Maybe spring. But I can't, I have no data in front of me that says, oh, look. So that's why you'll see me track the 7-day moving average and tell you that we had 3,609 homes come on the market today, or this 7 days, and we got 3,888. That means inventory is still declining. So we need those numbers to be, the listings need to be higher than the contracts by a lot. And until that happens, prices are going to go to the moon, whether we like it or not. The only other outside influences would just be anything in the financing world that hits a logjam, like something like a unforeseen credit freeze. And again, we don't see anything out there that shows that that's coming. So
I mean, rates this last week though proved that. I mean, when you see, once again, I'm gonna go back to this. I know you get rolling, but once again, this was a period of stable times, stable rates. This is when you want to be locking. Problem is now people start saying, oh, they've run up, but I think we're going to see this coming back down. And this type of spike is what, if it was prolonged, it kept going like this, that's when you would see a slowdown, obviously. I mean, I think people would take pause.
Yeah, I think so. Every time we get to a new low rate, we're calling that the base rate that we want to get our home at.
Yeah.
When it comes up, it's like, oh no. Well, wait, they used to be at 7, now they're 2.9. Oh no. So I get it. I had a father-in-law who was a commodities trader, and he'd look at those charts and he goes, Rick, everybody wants to buy at the bottom. Everybody wants to sell at the top, but you make money if you could just get that chunk out of the middle.
Right in the middle. Yep. I mean, you don't make money in the bottom. It's always in the middle. And it goes back to rates. People want the lowest rate. I get it. My job is to give you the lowest rate. If you were to call me today and say, what's your rate today? But I'm not looking to buy for another 6 months. I mean, if you were to call me here and say, hey, what's your rate today? And all of a sudden, 3-4 months later, they're here. Well, that quote right here doesn't mean anything, So
yeah, that's right.
I mean,
all right. Well, everybody have a super weekend. Pat, you have fun as well.
All right. Thanks, Rick. Talk to you later, pal.
Thanks. See ya.
Good talking to you. Bye-bye.